Welcome to Momentum Monday. Today is Sunday, November 3rd. Howard's flying to Tel Aviv, so I decided to do a quick update on my own. Probably will make another video tomorrow with him, and it will be named Falafel and Stocks, most likely. So let me share my screen and go over some interesting developments in the market. We are looking at the chart of the S&P 500. All large cap indices, meaning the SPY and the QQQs, are at all-time highs. Small caps are trying to kind of catch up. The Russell 2000 has been finding resistance near 160 for quite some time, so it'll be interesting to see how it will react as it's approaching that level. And since the large caps are already trading at new all-time highs, one can make the arguments that we have shifted from a range-bound trading environment to a trending trading environment. And trending market have to be approached in a completely different manner than range-bound. In a range-bound market, many of the breakouts fail. Many moves only last 1, 2, 3, 4 days. And this is why all active market participants get conditioned to take profits very quickly during range-bound markets. But what worked in a range-bound market can now be a huge weakness in a trending market. Because in a trending market, it makes more sense to stay longer with our winners, because most breakouts tend to follow through, and most stocks trend longer. So it takes, so smart traders will adjust, but of course it will take some time. Of course, bull markets are markets of stocks. That means that the bullishness is never equally shared. That means that while 1 or 2 or 3 sectors keep making new all-time highs, other sectors might consolidate through time or might even correct. And we're actually seeing that with the major indices making new all-time highs. We see some very interesting weakness in many consumer discretionary retailers, restaurants. I mean, take a look at McDonald's, for example. It's already back below its 200-day, and Shake Shack also down 20% from their new all-time highs. Nike, which had an amazing earnings report, have pulled back to its 50-day moving average, and it seems deep buyers are in no rush whatsoever to step up here. Also Lululemon, also starting to show some relative weakness. Look at this relative strength line starting to turn down. So it's not only unicorns and rainbows and candies out there in the market. There are definitely some stocks and some sectors that are showing some weakness, but this is normal for a bull market. And this is why we say that bull markets often correct through sector rotation. So who are the leaders? 3 sectors stand out for sure. We talked about biotech starting to set up. Look at that beautiful breakout on Friday, and so many of the big biotechs have made major moves in the past week or so. This is Amgen breaking out to new multi-year highs. Illumina, I mean, they have room to grow for sure. Celgene breaking out. Many of the large cap biotech are starting to perk up. And it will be interesting to see if the small cap biotechs also join the party. And I think on Friday, we actually started to see quite a few of them to move. For example, look at this one, MGTX. Look at this big 10-15% move on Friday. They cleared their declining 20-day moving average, and I wouldn't be surprised if they try to test the 50-day here near 17. And as I said, it's not just MGTX. There's so many other other biotech stocks, smaller cap, they're starting to set up or break out. So we should be paying attention to this sector. And of course, if you don't feel like stock picking, there is always the leverage biotech index, LABU, LABU. You can always trade that. The second leading sector, of course, continued to be home builders, especially building materials. There were several very strong reports in the sector last week, and all of them led to huge breakouts to new multi-year highs. So this is definitely one of the leading sectors right now. And the third one that I wanted to highlight is semiconductors. New all-time highs on Friday. My personal opinion is that all pullbacks to the rising 20 and 50-day moving average in SMH, which is the semiconductor index, are buying opportunities. And you can even use the 3-time leveraged semiconductor ETF SOXL as a proxy. So all the pullbacks to its rising 20 and 50-day, I think, are buying opportunities. And if you want to dive in further and look at some of the individual names, you see so many bullish charts. Basically, anything related to the 5G trend has been doing well. There is a 5G ETF, FIVG, which has about 60 holdings, and half of them are looking pretty constructively. Qualcomm is one of them. They report earnings this week on Tuesday, I believe. Look at this beautiful breakout last week. Definitely, many people are trying to front run a potential good earnings report. Another semiconductor that looks decent is Microchip, MCHP, setting up on multiple timeframes. They also report earnings this week. Look at this beautiful setup that they have built on a weekly time frame. Intel had a strong earnings report and is now bull flagging near its 50-day highs. AMD, another cheap stock that is up near its all-time highs and consolidating for potential breakout. NVIDIA is also acting very constructively. It usually has a breakout, then a slight pullback to its rising 20-day moving average, and then another move higher. So this is a bullish market behavior. NVIDIA reports in 11 days. And so we have semiconductors, especially 5G related stocks. We have biotech, and we have home builders related stocks. These are the three major leaders right now. But I wouldn't be surprised if we continue to see a lot of mini sector rotations as the indices grind higher. This is very typical for a bull market, and sometimes it's very hard to try to follow all the new leadership on a weekly basis, because it really can change very quickly. Let's take a quick look at the mega caps. This is Google try to break out to new multi-year highs on their earnings, pulled back a little, found support near its rising 20-day moving average, and on Friday started to move higher again. Facebook kind of looking similar, try to break out on earnings. Facebook is it is the only social media stock that is that has done well this earnings season. Anything else, Twitter, Pinterest, has been absolutely slaughtered. I have no idea why, just the market didn't like the results. And as you can see, bull markets, this is why we call bull markets markets of stocks. Not all stocks rise at the same time. Amazon, despite missing earnings estimates, is starting to set up again near its 1800 level, which coincides with its 200-day moving average. Apple, the undisputed leader, just keeps making new all-time highs. I mean, I wouldn't chase it up here, but it's definitely has been extremely strong. Microsoft too. Look at it, how it's setting up here near its all-time highs in a tight range. It will be interesting to see if some of the software stocks will finally start to find some footing and build new bases. Last week we saw another earning disappointment in Twilio, which broke down to new multi-month low. But on the other hand, Alteryx AYX managed to revamp its 220-day moving average. So it will be really interesting if they can close above 100. I think if they do that, they have a chance of testing its declining 50-day near 112, 113. So that's definitely a name to keep an eye on. Cybersecurity stocks might also come back in fashion. Look at these big earnings breakouts in Fortinet, FT&T, and some proxy plays in the industry is, for example, Zscaler, ZS, which has had 3 very tight range closes near its flattening 20-day moving average, and I think moving here above 45, 50 can be a decent buying indicator. You know, we can see a move towards this declining 50-day, which is around 50. So there is a 10% potential move here in a good market. One thing that puzzles me right now is that if the deal with China is so secure, why aren't the Chinese stocks really breaking out and moving? I mean, for sure, FXI has stabilized and is kind of setting up near its flat 200-day moving average, but we're still not really seeing any major moves in Chinese stocks. On Friday, Baba absolutely crushed earnings estimates, tried to break out above 180, it was denied again. I guess it needs more time to consolidate. So I'm keeping a close eye on some of the Chinese stocks. NTES is the one that is looking relatively constructively, setting up near its multi-year highs. Okay, so that's all for me today. Tomorrow we'll probably try to make another video with Howard, and we'll just cover other topics.